Finance Conference Canton Schwyz, presented by the following main sponsors: UBS, Interaction, Swiss Life Asset Managers, Ernst & Young, Drooms, Novus Partners, and the following co-sponsors: Schweizer Kantonalbank, Wirtschaftsförderung Höfe, Matic Suter & Partner, Business Network Club Zürichsee, Marketing Business Center, a company of Regus Group, Etzel Real Estate.
Guten Morgen, good morning, bonjour. Dear Councillor, dear panelists, dear delegates. First of all, we'd like to thank the Department of Economic Affairs of the Schwyz Canton for organizing such a high-level conference. We also thank the main sponsors, the co-sponsors, and as for me, it's an honor to be invited to chair this event for a second time. I have to mention one thing. Each of you will be given a little bag at the end of the event in which Victorinox has kindly given you a small Swiss army knife. This is not to encourage you to fight, but rather as a nice present to remember this wonderful event. It is also important to note that this small army knife can be taken in your hand luggage, so please do keep it with you. It's exciting. So a year ago, I talked about the difficult times the alternative industry was facing. There was the Eurozone crisis, uncertainty surrounding global regulatory change, and of course, a massive appetite for taxation. There was the frauds. A lot can change in a year. Having traveled the globe twice already myself, I believe things look much more positive. You may think it's easy for me to say because I do compliance and I do tax. But my clients do not. They need an environment they understand to operate under, to perform, and to raise assets. Today, I believe we understand where we are. I believe there is a degree of control over the economies of the world, not perfect. I believe we will see less fraud if we stick to the new rules. Focusing on my areas, I would note that there is less uncertainty with regards to regulatory change. It is easing, and I believe we've started to work with it in our everyday life. In Europe, the AIFMD is sort of done. Some jurisdictions have delayed everything for a year and put in transitions. Fine. Others, like Germany, have abolished private placement regime. In some sense, you could say there's more money for you in the UK, where there are transition periods, less money for you in Germany. In the US, the SEC registrations have been a relative success. More than 1,500 advisors have registered in the hedge fund space. There are exemptions for foreign advisors, which I don't think work very well, but the normal registration is workable. The Jobs Act, encouraging distribution, is also welcome. I think there is a lot of money for you in the USA. In Switzerland, FINMA has made their proposal for significant regulatory changes that will increase the burden for foreign advisors wishing to enter the Swiss market and needing a local representative. It will also probably displease some local managers, some of whom perceive the general lack of responsiveness from FINMA as a hurdle. However, I believe that in Switzerland, you're probably going to be equal as to what you were last year in relation to raising assets. You might face more costs. Of course, it would be nice if all the regulators worked together. Having said that, as a stakeholder ourselves to the FCA, the UK regulator with a new name, FCA, we see that even within the EU, this cooperation is very slow, and transatlantic, it is extremely slow. So that's not going to change overnight, and you need to plan globally. Taxation. That, I think, will continue to be a major pain and a major driver of where money goes. Governments will continue to look for tax money, and we can expect lawsuits and inquiries about domicile and places of business. This is particularly relevant to Switzerland today, and I'm sure we'll hear more about that later. Having said that, most managers recognize the value of substance and improvements in business operations and governance, which goes hand in hand with investors' expectations and the reduction of fraud. So, taxation is workable, even if the solution for some is moving money to where governments are less anxious about national debt. Luxembourg over Ireland, maybe. Singapore over some more socialist states in the EEA area. For the next 12 months, therefore, I believe our agenda is set. The industry has to survive. Survival will come from adherence to higher standards and to be above the rest and remain ahead of politicians. This is particularly true when it comes to compliance and substance. The industry must do more to continue to change from within. The industry has to regain trust through leadership. At present, the industry is not trusted enough, and it doesn't do enough to be seen as trustworthy. Anecdotal evidence still suggests that rich families worry about losses in a future financial crisis, buying gold, or even stocking it themselves. Investors still prefer to buy equities direct than investing in funds, and they even buy farms in New Zealand. The aim of the industry should be to change the way the finance industry invests. The next decade belongs to those who understand that smart investments will go to those who are not the biggest, but to those who are the most organized and able to perform because and despite of regulations. Processes are key drivers to your organization. To do that, investment selection should place the emphasis on operational due diligence. Financial data points are available to all and have not proven their worth in portfolio management. The last underexploited area is operations, where skills can unveil long-term true performers. In this context, what about Switzerland's current and future standing in the industry? Couple of points. It's obviously important for Switzerland and cantons like Schwyz to continue to be competitive against major business centers like London or New York, but also against newer business centers such as Hong Kong and Singapore. As we know, Asia is being relatively aggressive in terms of taxation and regulation. They have a lean system. Cantons like the Schwyz canton also have to compete with other cantons in Switzerland. But here, they have the benefits of low taxation, both at the corporate and individual level, and a sophisticated workforce, being so close to Zurich. Notwithstanding that, they have to work within Switzerland as a whole. And as we just said, FINMA has a few challenges ahead, and they are under the spotlight. There are some exemptions to their rules with regard to smaller managers, but I believe bigger managers still need a lot of grooming and possibly commercial love. The issues of domicile will also remain crucial to what is happening now. Is it worth being in Switzerland, working with offshore funds, offshore companies, when tax changes may lead to a higher tax rate, combined with higher regulatory costs, thus reducing profits? This will make it harder for smaller entrepreneurs. The impact of these changes may not happen for a decade, but a decade is short. Just think about the French and the Germans. Their economies were aligned, and in 10 years all of that changed. That was the 1990s. I know that today we have the means to answer all of these points and questions, and even more. I think you will all have a very enjoyable day. I will leave the floor to our host, Mr. Kurt Zibung. Mr. Kurt Zibung, for those of you who don't know him well enough, was a former Minister of Education here in the canton, President of the cantonal government, Head of the Department of Economic Affairs, then Minister of the Department of Economic Affairs, and now Governing Councillor of the Department for Economic Affairs. I wish him a warm welcome, and I thank him and all of his team for organizing such a great event, a great forum for debate, discussion, and networking. Thank you.
Thank you very much. Ladies and gentlemen, good morning. After the turmoil, the international financial market were shocked by the European debt crisis, a series of bad news. The states and their currencies had to be stabilized by the central banks and politics through drastic intervention. This had a substantial impact of the financial world that has resulted in a new strict regulatory environment which has been altering the finance industry profoundly. The financial industry counts to be a main economic pillar for the canton of Schwyz, which we are determined to preserve. There are about 150 companies with a revenue of 900 million Swiss francs in the canton of Schwyz, whose approximately 5,500 employees are either directly or indirectly affected by the changes. That's the past. On the third Finance Congress today, we are going to look into the future of the financial industry. We are also going to discuss the following question. Can the Swiss financial industry hold its ground in a fierce international competition in an increasingly stringent regulatory environment? Even if this question cannot get a final answer today, here the conference provides a platform to obtain first-hand information, to share ideas, and last but not least, to maintain your personal network. Dear speakers, dear guests, ladies and gentlemen, on behalf of the government of the Canton of Schwyz and the host communities Feusisberg, Schinderlegi, Freienbach with Pfäffikon and Wollerau, it is my pleasure to welcome you here to the third Congress of Finance Valley Lake Zurich in Pfäffikon, and the subject, the future of the finance industry. The second finance conference last year, with about 450 guests from Switzerland as well as from abroad, was a great success for us. This year, the number of participants has risen to over 500. With this conference, we have obviously recognized a need in the industry. We are very pleased about this, and it encourages us to further develop this event and host it again next year. We are proud to be able to present you again our nationally and internationally recognized speakers from the areas of business, politics, and science. I would like to welcome Dr. Patrick Raaflaub, CEO of FINMA, Mr. Luke Ellis, President of Man Group, who was arrived directly from London to be with us today, Dr. Peter Kurer, former Chairman of UBS, Excellency Mr. Richard Jones, Ambassador of the European Union, and last but not least, Mr. Edgar Kresin, Treasurer of the German Bundesland Sachsen-Anhalt. We are looking forward to their exciting presentation. Thus, the Finance Conference Pfäffikon is the largest event of this kind in Switzerland. We can also look forward to other exciting personalities from various fields who are going to give fascinating presentation. Please find further details in the program overview. Dear speakers, dear panel participants, thank you for sharing your experiences with us and the opportunity to obtain inside information directly from such high-level professionals. Another highlight of the day is that the Zurich University of Applied Science is awarding the best hedge fund for the second time. I would like to take the opportunity to thank all our sponsors and partners of the generous support. Their contribution have made it possible to organize this event without attendance fee. And before I pass the word, please allow me a personal remark. The government of the Canton of Schwyz recognizes the importance of a stable and strong Swiss financial industry. In Switzerland, as well as in the Canton of Schwyz, countless companies and jobs are closely linked to the financial sector. The government of the Canton of Schwyz is going to do its best to remain an attractive and reliable partner of business location in the future. With this event, we would like to demonstrate our determination to strengthen the financial sector and ensure the companies and workplaces that are already settled here. And now, I would like to wish you an exciting and informative day with great impressions, and I thank you very much for coming here to Pfeffikon. Welcome.
Thank you very much. And now we'd like to welcome Dr. Jakob Schaad, who's going to talk about Swiss banking in the new world. Dr. Schaad, as some of you may know, was a former Minister of Economic Affairs. He advised the Swiss President, Doris Leuthard. He was also a member of the Swiss National Bank in Zurich, and also Switzerland's Executive Director at the International Monetary Fund in Washington, D.C. Let's welcome him. Thank you.
Thank you. I guess this is a bit too much of an honor. I haven't been a minister. I've been an advisor to a minister, which I hope will be enough for you. I'm going to talk today. Is this working? There you go. It wasn't, the switch was off. Okay, I'm going to talk today about the new environment, and I'm going to try to concentrate on a few issues because I think there are a lot of issues, a lot of challenges out there for the Swiss financial center, and I think actually a lot of challenges for the financial industry in general out there. So I'm going to concentrate on a few of them. One is tax environment, was already mentioned in the introduction, the new tax environment. The crisis has whetted the appetite of governments to generate more tax revenue, and they're trying to do that in various ways. And then the new regulatory environment, because also there, the financial crisis was a driver of new regulation and re-regulation. I'm going to draw some conclusions. I would like to start with, yeah, this works. I'd like to start with the general picture of the Swiss financial center. Where are the challenges around us? And I think Switzerland is a truly global financial sector, has a truly global financial sector that produces globally its financial services. That means that an important driver for us is international regulation. So for Switzerland and for our sector, the G20 are very important. The OECD is very much a driver of tax policy nowadays. The Financial Stability Board, of course, the Basel Committee, the IMF and the FATF. So that's the international regulatory environment that impacts Switzerland. That then impacts, of course, Swiss regulation. I also put this here, although this is not directly an issue of the financial sector. And then these two really impact policies. Here, the new policy of double taxation, where Switzerland made a big step toward exchange of information upon request. And the new tax environment, of course, also brings with it its need to deal with a past where things have been done in a different way. So the Swiss Financial Center and the Swiss Confederation addressed this in various ways. One way is the policy of double taxation, where the OECD standard of information, also on tax issues upon request, was accepted and is now still implemented through double taxation treaties, and then deal with the past in various ways. Bilateral agreements, as we have negotiated and concluded with the United Kingdom, and where we are now implementing, and with Austria, There are also mandates for Italy and maybe a little less important, Greece. France is also a country where something will need to be done. Germany, the bilateral agreement wasn't ratified, but that doesn't mean that we're not on the way toward tax compliance in that country. Then, of course, for us in this environment, it's very often that way when you have a crisis, that there are certain tendencies that are protectionist. Some of them are openly protectionist. Actually, few of them are openly protectionist, but a lot of the measures have an impact that is protectionist. Sometimes it's not intended, but sometimes it may even be intended. So we have a lot to do now with the European Union. I'm going to talk a little bit more about these projects here of the European Union that impact quite directly on Switzerland. We're not so sure how this free trade agreement, these efforts here between the United States and the European Union will impact us, but it certainly will. First, FATCA, the new tax environment. FATCA was one of the reactions, I guess, inspired by the financial crisis. FATCA, the Foreign Account Tax Compliance Act, is a piece of legislation that applies outside the US. Basically, information about US persons and their revenues needs to be provided to the US tax authorities. Switzerland was one of the first to sign an agreement that simplifies, or makes, I would say, makes possible the implementation of the FATCA. That was signed in February this year, and the ratification has just taken place in the second chamber. Now, so the objective of this intergovernmental agreement is to simplify the implementation of FATCA, to simplify customer identification, because of course Switzerland has done that for quite a while. Swiss financial institutions are actually quite good at identifying their customers, good know your customer rules. And then finally, the data transmission from the Swiss financial institutions toward the IRS. This is FATCA. Here we are implementing very quickly. It is a complex piece of work, but I guess the intergovernmental agreement that was possible to conclude makes implementation possible. Then I need to talk about the tax dispute, of course. I talked briefly about the past. We are trying to address in actually all the countries, the important countries. We address that with bilateral agreements with the United Kingdom, Austria, and Germany, where unfortunately it wasn't ratified. With the United States, there was also a tax dispute going on, and the two countries tried to find a solution for quite a while. The solution now is, let's say, the basis of the solution now is a unilateral program that the Department of Justice issued after, let's say, I'd call it negotiations because the government was involved in that. And this program will be available to those banks that are not directly involved so far in criminal investigations by the Department of Justice. What the SBA is now doing for their banks is coordinating these efforts, because I believe it is important that banks are diligent and careful in their risk analysis, analyzing their situation with US customers, and then decide whether to participate in this program and in which category, because there are different ways the banks can participate in that program. We are helping the banks there to do that. This program, that is the ambition of the program, is to get closure for the banks in Switzerland as the tax dispute is concerned. Tax environment the next, I need to, this is very important, I guess, automatic exchange of information. We had a very rapid development as the way of ensuring the payments of taxes is concerned. The emphasis today is clearly on exchange of information and not on withholding taxes anymore. We all know that withholding taxes are a very effective way of ensuring that taxes are paid. But it is, of course, important for Switzerland as a financial center to acknowledge the international developments, and that development is toward automatic exchange of information. And we do see within the OECD, especially now, a trend towards automatic exchange of information also on tax matters. We think that there needs to be a global standard to be set here, because for the financial institutions it's not possible to comply with the standard of every country and every jurisdiction in the world. So for us, it's very important to make sure that there will be one standard how this information is exchanged, not one with this country and one with the other one, and the financial sector would be overwhelmed with tax compliance work according to several standards. We support that. Switzerland cooperates on the development of these standards. I think that should be within the OECD. That is very important. And the Swiss Bankers Association supports this. However, what is important for us is that at the same time, because we are a global financial center, that market access is ensured, that we have access to our customers cross-border, that the financial system is not becoming nationalized. Several autark financial systems, we believe, is not a good way to go. I believe the overarching objective needs to be to comply with international standards. This is something that we totally support. I think here is very important for Switzerland to address the issues that need to be addressed, to be able to go into the phase 2 of the peer review of the Global Forum and to be able to pass that test. There needs to be a few things done on the list still. One of them is exemptions to notifications of clients subject to information requests. So if you get information requests in the banks, nowadays the client needs to be notified in every case, and that is something that is not acceptable to OECD. Then we need to have a solution to the bearer shares, and that's a little worky, because here I always get the feeling that the goalposts are moving. The OECD says that needs to be more double taxation agreements. But I think we need to concentrate on this and make sure that we are able to comply and pass such a test, phase 2 test of the peer review. Then I believe that what is important for us is really to concentrate on this. But in Switzerland, there are also other efforts going on, and one of those efforts is the strategy of taxed assets, the Weisgeldstrategie. I think the strategy of taxed assets isn't quite clear. We think it is really important to concentrate on those things that are expected from Switzerland and not try to do other efforts that really just tie up resources and will not bring a lot of advantage and recognition internationally. So we think that those efforts should actually be suspended now, and we should concentrate on influencing a standard that is good, that makes sure that the beneficial owners are identified globally and everywhere. I'm going to the regulatory environment. Here, as I said before, with the financial crisis, there is a lot of re-regulation going on, and I'm sure Switzerland has done a lot on that, but some of it really has consequences that I believe are not really desirable. And in the European Union, I listed those projects that especially have an impact on us because they impact cross-border, the provision of cross-border financial services. The hedge fund directive here, what is important for us, and that is actually in the directive now, is that the asset management of those hedge funds can be delegated into another country. That is assured, but the European Union is still working on a level 2 rules, and those level 2 rules, such as letterbox rules, could still impact on the ability to do cross-border work and to have work in a world of division of labor. Then MiFID II is really a big headache right now because the Markets in Financial Instruments Directive, such as it is now in the process of the trilogue in the European Union, still contains provisions that will make it very difficult for Swiss banks to provide cross-border services. The most important there is that a branch should be required and that services, financial services from third countries in the European Union would have to be provided through that branch. That is, of course, not how Swiss banking works, and that is not what the customer wants. The customer in, say, Germany doesn't want to be served by a branch in Germany. Why would he have Swiss banking if he wanted that? So that is really something that is for us a big problem. We acknowledge that the investor needs to be protected, but we think there are other ways to do that. Then the European Union is not, of course, the only bloc that is regulating in a way that makes the provision of cross-border services difficult and that has some protectionist impact, whether desired or not, intended or not. It's also the US, and here I mentioned the Dodd-Frank Act, where Section 165 requires foreign operations in the US to organize themselves in intermediate holding companies where they have to hold extra capital. So that is one thing that is also, which then puts those foreign operations into a disadvantage compared to their US competitors. So, okay. But I believe Switzerland is, and Patrick Raaflaub will probably talk on that too, is really on the forefront of regulation in many parts. Basel III, we are very fast. Switzerland was one of the quickest countries to implement too big to fail regulation. And we also, actually here, the Swiss Bankers Association really worked together as measures are concerned regarding real estate and mortgage. There are some concerns that there might be some overheating in the real estate market, and we issued a self-regulation that should help to alleviate those worries. All this being said, of course, we also need to acknowledge that we work in an environment, in a competitive environment, where, of course, a regulation, a Swiss finish, can be a disadvantage. So what we need to do there is really to make sure that there remains a global level playing field. So we need to see what others do as well, and use our influence in international organizations to make sure that those regulations are also implemented elsewhere, and also here in Switzerland review from time to time those regulations that we implemented to see whether they work, of course, and whether they are a competitive disadvantage or not. Finally, I'd like to conclude on these things. I think Switzerland is under quite pressure now, but I think we have to take this pressure constructively and take the initiative. We have done that on several issues, on tax issues. We have done so, and also on regulatory issues. We also have to try to remain a step ahead, and the financial sector is trying to do that. All this being said, what I always need to emphasize is that the Swiss financial sector is very solid. Switzerland is really a country where there was never any danger of a credit crunch. I don't think that. In fact, credit provision was always, never had a problem during the whole crisis. So that needs to be kept in mind. Thank you very much.
Perhaps we can.
Yes.
We've got time for
right.
for a few questions. Any questions on the future of Swiss banking? I mean, I have one, if I may, kick this off. But how do you see you're talking about competitive advantage?
Yeah.
Where's the biggest competition today? Is it in Asia?
That's a good question. I think the Swiss financial sector is really unique in many ways. So where is the main competition? I think Asia is not only a competition for us, it's also a big chance. I think our banks do have a lot of business, and there's a growing business in Asia. So maybe a competition, of course, but it's not. It's also a big chance for the financial sector. Because the Swiss financial center is globally acting, I see more chances than challenges there.
Yes, please, the gentleman at the front. Do we have a microphone coming from all the way at the back? This is almost the Olympics.
James Smith. I'm asking a question in particular from the sort of regulatory perspective, and I'll ask the same question possibly to Patrick Raaflaub when he speaks later. In terms of regulation that's being issued by, say, the European Union, you mentioned the Swiss finish and the aspects regarding that. Obviously, you want the organizations that are based in Canton Schwyz to have access to the capital markets and so on. So how important is it that you take on European Union regulations? And how important is it that, say, Patrick and his team at FINMA and also the politicians look at, do we take on the European regulation as it's written, or do we add a Swiss finish plus or minus?
Well, Swiss finish is always a problem, right? If you want to put yourself out as a disadvantage. Do we have to take over European regulation? Well, it depends. What we need to do is ensure market access. I don't think we should just copy European regulation, but we can't ignore it. You know, the Market in Financial Instruments Directive is probably a case in point. Probably we need to do something, and there is actually a project going on, the FITLEC project, where some adaptations are looked at. But of course, the objective is to ensure market access, and that doesn't mean that we just have to copy European regulation. In fact, if we just copy European regulation, we'll have some problems with other regulations. So we really need to see where we can maintain access in a way where we find regulation that is recognized as equivalent, as having the same effect in the European Union. That is what we have to concentrate on, not just copy it.
Perhaps one last question? No, so then please join me in thanking Dr. Staub. Thank you very much. Go this way, yeah. Thank you. Well, to continue on the theme, we're now going to talk about the values of Swiss banking. We welcome Juerg Staub, who's a partner and head of private clients at Reichmuth & Co. Private Banks. He has been in banking forever, started at the Cantonal Bank of Zug, worked at the bank in Liechtenstein, then at the Bank von Grafenried, moving on to Dominic & Co., and then joining his current post, where he's also a partner with Unlimited Liability. Let's warmly welcome him. Thank you.
Good morning, ladies and gentlemen. We need more Switzerland and less hegemons. The reason why will be part of my speech during the next 20 minutes. To begin with, let's have a look back to the historical sources of the values of Switzerland. The founding roots of Switzerland go back to the 13th century in 1291, when the representatives of 3 regions surrounding the Lake of Lussan swore to fight for liberty and against the oppression of the governors of Habsburg. All over the centuries since then, liberty has been the most precious value of the Swiss people. There are several values which are closely related with liberty: freedom, self-reliance, equal rights, private ownership, legal certainty, openness. It was clear for the founders of Switzerland at the time that they wanted to be autonomous. They wanted to decide over their destiny and what values are the common drivers of their lives. Most important, they were ready to fight and therefore to sacrifice even their lives just to make sure that their heirs can enjoy a freer and better life. Let's switch to World War II. Switzerland, as a neutral country, was surrounded by countries at war. Especially Germany put Switzerland under heavy pressure, and Switzerland was scared that the Germans could attack. As we know today, they did not. There is a lot of speculation, why not? With high probability, it was a balancing act between standing for principles, in this case liberty and neutrality, and on the other hand, giving in to the outside pressure and accept some burdens from the countries at war. That was why, on one side, Switzerland, as a neutral country, accepted the transit of war goods by German and Italian trains. However, on the other side, Switzerland gave clear signs that the Swiss are ready to fight any attack and to sacrifice for liberty. Why do I mention to you these two happenings in Swiss history? And what does that mean in today's global context? I am convinced that the manner of people and governments in today's world has not changed compared to then. In general, it is still a fight for everybody's own interest. But fortunately, the playing level has changed to a more civilized one, at least for the moment. Instead of war with weapons, it is a war about economical and financial power. And for Switzerland, as a small country, it is still a balancing act to find the best position between principles and self-interests. Have you ever analyzed which values stand behind the word Swiss or a Swiss flag? Maybe you can see a little bit. What does that mean to you if you hear or read Swiss made, Swiss banking, Swiss quality, or Swiss brand? Is there any other specification of origin from a country which has similar power and similar culmination of values as the word Swiss? In my view, no, there is not. Swiss and Switzerland stand for reliability, top quality, know-how, trust, security of private ownership, stability, legal certainty, responsibility, self-responsibility, openness, common sense, and many more. But this is not all. Thanks to the political system of direct democracy and federalism, no other average citizen of any other country has so much political power as an individual Swiss citizen has. Furthermore, Switzerland is one of the most innovative countries in a variety of areas, and economically, it belongs to the group of most internationally connected countries at all. I invite you to look at all these achievements of the Swiss and the foreign people living in Switzerland, as well as Switzerland as a country, and I am sure you agree that this is an incredible asset, and we can be proud how rich we really are. However, we have to be realistic in two ways. First, staying rich is very tough, because you will be put under pressure and sometimes under attack by the poorer participants and poorer outsiders. Therefore, second, these achievements must be taken care of very seriously and ongoing. I am giving you some examples of international trends and their direct or indirect impact on Switzerland. First, the globalization is going on, and with the trend to centralization. The result for Switzerland is that foreign entities want Switzerland to implement or at least accept foreign or international law. And furthermore, in certain cases, it should even be valid backdated. This is a danger for legal certainty. Second, the control and exchange of information is a threat to liberty. Third, the trend to more and more over-regulation is destroying self-responsibility. Fourth, the interpretation of rules and law by words instead by sense is putting pressure on common sense. Fifth, the still increasing debt burdens of many countries are a danger to many assets and, of course, its owners. Somebody in the end has to pay for it, and this will rather be the rich than the poor. And as a private banker, I must raise the question, who are the interesting clients for Swiss banks, the rich or the poor? I could go on, but I think these samples show very well that there is a global trend to deteriorate many of the values for which Switzerland stands. This, ladies and gentlemen, might be a threat, but it also can be an exceptional chance. There are still a lot of potential clients living on our planet looking around for trusted services based on values as can be found in Switzerland. It is therefore very important that we take this opportunity in the right way. For the Swiss financial industry, this means to focus on trust, reliability, transparency, know-how, and willingness for top-quality services and advice, global networks, structures and setups, global asset management, custody services, pension and insurance services. And last but not least, to focus on innovation, which has not been the main driver of the business models of many institutions in the Swiss financial industry during the last decades. For the Swiss government and its authorities, this means to set a general framework which supports a strong and international competitive financial industry in Switzerland, and therefore it has to stand for political and financial stability, legal certainty, security of private ownership, open economy, free market access to foreign markets, and a high number of double tax treaties, regulatory frameworks which allows the financial industry to be internationally competitive. Yes, I know that this is easier said than achieved. However, we, the financial executives, the decision makers and the politicians, have to be aware that our main competitors do not sit next door. They neither sit in Zurich, Geneva or Lugano, but in foreign financial centers like Singapore, Hong Kong, London or New York. Unfortunately, it seems to me that this awareness is not present in everybody's mind yet. On one hand, the banking industry is divided and is not positioning itself with one voice versus outside pressure. Furthermore, it has rather been reacting instead of acting on global climate changes, like tax issues, with impact on some business models. On the other hand, our authorities are not strong enough to make clear to the foreign countries where our border starts and where the limits are. It seems to me that they have not realized yet what is necessary for the Swiss financial industry to be able to compete globally out of Switzerland. This is seen in regard of international negotiations and in setting up the financial business framework. I strongly invite you to be inspired by the Swiss values. Here they are, and open to do everything to maintain and further develop them. Be ready to find the right balancing act to save our common interests of being one of the prime financial centers in the world, which is based on the characteristics of these true Swiss values. Be ready to fight for them and for each other, as was the case by the founders of Switzerland more than 700 years ago. Ladies and gentlemen, I'm convinced that we need more Switzerland. Thank you.
Thank you very much. Perhaps we have got time for some questions. Whilst people think about it, I'm happy to kick off. You talk about the decade. I like to think in terms of decades. So what is your bank, or what are you doing in terms of leadership to try and combat the influence from abroad in terms of taxation, in terms of regulations?
I mean, our focus was since the beginning in foreign countries to be active in Germany. And we have an asset management company which is BaFin licensed in Munich, based in Munich. And of course we do services out of Switzerland what private banking is concerned. Fortunately enough, we were always focusing on declared money, so we don't have the big problems. And if you focus just on one country as a small institution, a part of Switzerland, you have the chance also to develop innovative products for the German market, which we do at the moment.
Okay, interesting. One more question on my side. No more American clients?
We have American clients, or I mean, defined by the US government, US persons, but of course they are fully declared.
Okay, so leadership through transparency.
And these are not, it's not our focus market, but of course you have people who moved from Germany to United States or from Switzerland, and therefore you still have somehow an impact.
I always feel sorry for the Americans because they seem to have been banned from private banking in Europe, at least. Okay, well, on that note, thank you very much.
Thank you.
You've got no. Okay, so you can join the. Okay, I think you can go back here. So. I think we could have kept the Swiss flag here. For our next talk, we're going to delve into regulations, and it's going to be our great pleasure to hear directly from the Chief Executive of the Swiss Financial Market Supervisory Authority, which you all know as FINMA. Dr. Patrick Raaflaub is going to tell us about the current regulatory and supervisory environment. As some of you will know, Dr. Raaflaub started his career at Credit Suisse, EBDI Consulting as well, then joined Swiss Re, which is when it becomes very palpable, in 1994, running as the CFO, Swiss Re Italia, controller for America in New York, head of finance in Zurich, moving on to be the CFO for Swiss Re Zurich, and responsible for IT financial applications. In 2005, he was appointed the CFO for Continental Europe and Asia. 2006 to 2008, he led the capital management group, and in 2008, he was elected as the CEO of FINMA. Before he takes to the podium, I'd like to tell you all that we are being recorded today. although I'm sure that will not deter Mr. Raaflaub from saying very interesting things, but it's just worth mentioning. So let's welcome him. Thank you.
Thank you very much, and you could have left the flag, even though I grew up in a place which joined Switzerland only 500 years ago. I still feel very much Swiss. Anyway, Governing Councillor, ladies and gentlemen, it's a great honor and pleasure to be addressing such a competent and knowledgeable audience. I'd like to, as probably you would expect, to cover a little bit our assessment of the current situation of the financial center and what should be done, and also what part can regulation and, more importantly, supervision, which we are responsible for, contribute. What does the future hold for the Swiss financial industry? This issue has certainly become very much a focus of attention. Hardly a week goes by without legislators, academics, industry representatives such as here, trade associations and others voicing their opinions. And they all tend to come to the same conclusion: the financial industry is ailing. But when it comes to identifying the ailment, the opinions start differing. Some commentators see the current difficulties as no worse than, say, a 3-day flu or 3-day cold, while others diagnose lethal pneumonia. Nor is there much consensus about the causes or how it can be cured. Some people believe that Switzerland gives way too easily to the demands of foreign governments. Others believe that Switzerland is too slow to react. We've heard both already today. Some point the finger of blame at Switzerland's excessive regulatory burden, others at inadequate investor protection. Some criticize the implementation of internationally agreed rules, others express concern about market access. With all these crosswinds, needless to say that it's not easy to steer a steady course. My aim here today is to focus on what I see as the causes of the difficulties we now face, and I'd also like to outline some potential remedies and clarify, as I mentioned before, the role the supervisor can play in all this. Without giving away too much, and in order also to keep you motivated to listen to the end of my speech, through the end of my speech, I can say that I remain optimistic for the Swiss financial center. It has a future, and actually it's a good one. During my talk today, and this is my last introductory remark, I would like to make clear that my frame of reference is the entire financial center or financial industry of Switzerland, and not any specific subsector. When contemplating the future, the diversity of the financial center is an asset, but it also poses some challenges, and it needs to be taken into account. Let me come to my first part, which I entitled The Burden of the Past, or you can also maybe call it the burden of past successes. Let us focus for a moment on the importance of the financial industry to the Swiss economy. It accounts for around 10% of GDP and employs more than 200,000 people, most of those in actually above average value creating jobs and therefore paid jobs. In addition, it provides irreplaceable services such as credit and payment services to the rest of the economy. It's also called the lifeblood of the real economy. One of the key distinguishing features of the Swiss financial sector is its export orientation. For decades, Swiss banks have provided reliable cross-border financial services. Many Swiss banks have established subsidiaries in the world's leading and fastest growing economies and other financial centers. And 2/3, just to cite another sector or other subsector of the financial industry, 2/3 of those employed in the Swiss insurance industry actually work outside of Switzerland. This international orientation has enabled the Swiss financial industry to expand beyond the limitations of its home market. The downside of this global footprint is that the Swiss financial industry is exposed to international events and trends. In recent years, following a long period of growth and rising revenues, the future has begun to look more uncertain. At present, the Swiss financial industry is trying to adapt to a changed and changing environment. And the results of this transformation is turbulence and uncertainty. In my view, this transformation has four main aspects. First, market participants face increasing difficulties in coming to terms with the low interest rate environment. While unconventional monetary policy intervention has helped calm financial markets and prevented economic meltdown, it has shown significant side effects. These are becoming more and more apparent in the accumulation of new risks and in significant capital misallocation. Second, competition among the world's leading financial centers for market shares. Clients and assets have intensified, and the new market participants have risen to prominence. We are witnessing currently a tectonic shift in the global economic balance of power. Third, market access barriers and the international reach of national legislation increasingly constrain the free movement of financial products and services. Financial markets are becoming national again. This is particularly damaging, as you can imagine, for an export-oriented industry. And then there is a fourth Swiss-specific aspect: the legal and reputational risk stemming from past business practice in cross-border wealth management. It is my view that the legacy of undeclared assets is the main cause of the difficulties currently being experienced by the Swiss financial center. The acquisition of management of undeclared assets, at one time a steady, lucrative business for banks, lawyers, trustees, etc., all alike, no longer represents a viable business model. Even worse, this legacy has become a major burden for many institutions. Although FINMA repeatedly warned the industry of these dangers, its words of caution fell on deaf ears or were dismissed as being too prescriptive. I can only hope that this paradigm shift has now been understood by all market participants. Of course, this is all very challenging, no doubt. But the full potential of the Swiss financial industry can only be realized if it can leave its past behind. This legacy problem will continue to soak up resources and distract Switzerland from the need to prepare the financial sector for the future. And which is even more important, this issue has not only affected those directly involved, it has also prevented the industry as a whole from capitalizing on its strength. In economic speak, a classic negative externality by now. Which brings me to my second part. Change also brings opportunity. We all know that and we live on it. Switzerland has many undeniable strengths. These include long-term political and macroeconomic stability, functioning institutions. Yes, I can say that, functional institutions. A liberal and flexible labor market, at least today. And a highly developed technical infrastructure, to name only a few. Without these factors, Switzerland could not have become one of the world's major financial centers. Switzerland is also fortunate enough to be able to plot its future course from a position of relative strength. I see several areas in which the Swiss financial center still has potential. Switzerland could, for example, continue to build on its insurance and reinsurance cluster. Or it could also become a key capital markets player in continental Europe. As bank funding, especially in Europe, retrenches, funding from the capital markets for the real economy will become more important. Regrettably, Switzerland's position in this field is hampered by its unfavorable tax environment. I refer to the fact that stamp duty and withholding tax have made it very unattractive to conduct capital markets business out of Switzerland and to issue paper out of Switzerland. This is why most Swiss companies, even Swiss companies, raise capital abroad, and no foreign transactions are executed currently in Switzerland, despite our strong currency and stable financial system. However, I would like to emphasize that harnessing new opportunities demands more than just an adequate framework for business. It requires the right business strategies. The framework alone cannot provide the answers. Take the asset management industry, for instance. The Swiss market is relatively small in international terms. A logical step would be to turn to international customers, as banks and insurance companies do. However, Swiss providers cannot offer their products abroad because Switzerland does not offer the same level of investor protection as other jurisdictions. Moreover, Swiss tax law tends to make Swiss asset management products less attractive for foreign investors. These systemic deficiencies are compounded by a lack of innovation. Some market participants seem to think that it's only a matter of repackaging and relabeling existing products, or that relying on the distribution of foreign products is a winning strategy. And since the most significant asset managers are banks, competition-enhancing innovation is also hindered. In past, revenues generated by undeclared assets made up for these shortcomings. But in the future, product innovation and service quality will determine whether Switzerland succeeds in becoming an asset management hub, which is one of its ambitions. As things now stand, the balance is still in favor of strength and opportunities. It is the responsibility of the private sector to capitalize on these strengths by focusing on innovation and quality. This leads me to the third part of my speech. What role should the supervisor play in the development of the financial industry? Regulation provides the framework within which a strong and stable financial center can thrive. Small, open economies like Switzerland need internationally compatible and accepted standards. That is why I've always advocated a properly designed equivalent strategy that aims to secure market access. I remain convinced that we will have to bring the key points of our regulatory framework into line with international standards. Obviously, this will entail the loss of some degree of sovereignty, but in my view, it remains the right strategy for an export-focused economy. This does not mean that we have to regulate in exactly the same way as other jurisdictions. Our country can set an example for others in important areas such as capital strength and liquidity rules, for example. Conversely, our regulation of other areas can be less restrictive and prescriptive than, for example, in the European Union or in the United States. However, these are only recommendations. In the end, it is for the Swiss legislators, for the parliament, for the politicians to decide which path to take. What we can influence as the supervisor, however, is the supervisory framework within which we pursue the strategy I have outlined. We are tough when it comes to compliance with core prudential standards, including capital, liquidity, and risk controls. Stability and an untarnished reputation are seals of quality for every financial center and a unique selling proposition for investors and clients alike. It has been mentioned before on this podium. One only needs to look, for example, at the success of UCITS funds, which have become a recognized label all over the world. Security and stability are core components of the attractiveness of any financial center, especially of the Swiss financial center. Our supervisory touch is lighter where individual products and product innovation are concerned. In my opinion, there needs to be room for innovation. There are many areas in which Swiss legislation is less restrictive than in comparable markets. In asset management, for example, this is the case, and in conduct rules as well. Unfortunately, this Swiss discount receives significantly less media attention than the so-called Swiss finish. While we're on the topic of asset management, let me touch on a criticism frequently voiced and directed at FINMA, the perceived slowness and bureaucracy of our approval processes. In cases where applications demonstrate a clear business model, adequate corporate governance with proper checks and balances, and clear separation between front and back office functions, the approval process takes an average of 2 weeks. This is not extremely fast, but it's largely in line with comparable jurisdictions. On the other hand, if we receive an application involving clients with legacy assets, companies in the British Virgin Islands, and a number of Swiss pension funds, and if the applicant is unable to answer even the most basic questions about his business strategy, we need time to assess the situation more thoroughly. And applications, for instance, in which the applicant wants to be at the same time chairman and CEO are rejected outright. Moving on to the distribution of foreign funds. FINMA's practice is equally clear and transparent. We only approve funds for distribution if the foreign company meets standards in terms of internal organization, investors' right, and investment policy that are roughly equivalent to those set out by Swiss law. Our aim is to ensure that the investors in foreign collective investment schemes benefit from the same level of protection as those that invest in Swiss collective investment schemes, and also that the host supervisor cooperates with us in a professional and transparent manner. I come to my conclusions. In a recent Deloitte study, the writers of the study concluded that state actors are responsible for as much as 94% of all factors determining the competitiveness of the Swiss financial industry. I have to say I disagree strongly with this analysis. If this were true, then why don't we just nationalize the whole financial industry? Undeniably, the state plays an important role by setting the framework, but the decisive factors are the breadth and depth of the products being offered, competitive cost structures, quality, and innovation. The best framework can achieve nothing if market participants do not rise to the challenge. Switzerland's financial industry, particularly one subsector, is in the process of fundamental transformation. To take this as evidence of a decline in the financial industry as a whole is short-sighted. Scapegoating the supervisor is nothing more than a convenient excuse. Switzerland has many natural strengths. There are opportunities on the horizon. To exploit them, however, Switzerland needs to distance itself from the past. Other industries have come through similar transformation processes, strengthened and revitalized. The watchmaking industry, just as an example, owes much of its current success to entrepreneurial spirit, innovation, and outstanding quality. The same virtues need to be at the core of Switzerland's endeavor to maintain a leading financial center. You can rest assured that we will play our part in ensuring that the Swiss financial industry has an adequate supervisory framework. I thank you very much for your attention. Thank you.
We have time for questions. I think it's a rare opportunity to talk directly to FINMA, so I would hope that somebody has something to ask. Is it that you're currently going through registration? Is it that you look at the world of capital markets, which is a very interesting topic, and stamp duty? I'd welcome comments or questions on those topics. Has anyone been through a FINMA registration in the last 6 months? We got somebody at the back?
Sure, we have been, but now quite some time ago. So I hope things changed, and it seems they have been. My question is, with regard to regulation, I think it's very important to have very knowledgeable and qualified personnel at the regulator, which is a challenge for any regulator globally. But I think it's particularly so in Switzerland because simply it's a smaller country. How do you deal with that issue? And it's been recently noted in the press the high turnover at FINMA, and how would you look to attract knowledgeable people to work for you?
I think we have to distinguish a little bit the various areas, and it's not equally as challenging in every aspect of the FINMA staff to be attractive and also to retain people. So if, for instance, insurance supervision or banking supervision, we don't have a particularly high turnover, and we also don't find it particularly difficult to attract very knowledgeable, very experienced people from the industry with obviously a control background rather than a front office background, but that's what we want. I mean, we are an extended control function, we're not a front office function. In the asset, with respect to the asset management industry, we have a very limited supervision activity. You know that. We are in the process of building it up, and it is quite challenging to attract people. Those people come from the audit firms or the audit functions. And it's probably the natural place to recruit. With respect to approvals or the kind of the registration and approval processes, there we need typically a legal profile, we need lawyers. And the experience is probably less important in that area, the practical experience of a front office with a front office background, than it is in other functions. And we also have to realize or recognize that to some extent we are a training ground for lawyers who then basically also, because we can't pay the amounts that you allow your friendly law firms to pay to those lawyers, to retain them for more than, say, 3, 4, 5 years. Once they've been trained, they tend to double or triple up their salary levels by joining a law firm, which then supports you with the registration process. But having said that, and this is why I also emphasize this so much in my speech, we have changed the approval processes quite significantly. They are much more streamlined, they are much more transparent, but they're also somewhat more brutal than before. And it's less important to know FINMA than it used to be, which maybe also takes away some of the value of this experience, and we know how FINMA operates, because it is really quite a mechanical and transparent process. It's also helped by the new law, the collective investment scheme law, which actually allows us to be quite systematic in the approval processes.
That's a very complete answer. Anyone else, or yes?
Not the same question. I had time to prepare.
Yes,
Can
we
you
had
repeat it
that
anyway?
earlier.
I've done a bit of Swiss Finnish myself, and I've got an add-on question to the earlier one. If today you could make 3 wishes and be informed tomorrow morning that they were fulfilled on an ongoing basis, this could be something fulfilled by market participants, by the politicians and so on, by the international markets and so on, what would they be?
I didn't prepare for that one. Well, no, I think one is really what is this the tax issue for the capital market. I don't think that this alone will attract the capital market, a vibrant capital market activity into Switzerland, but it's an important impediment which should be removed, I think. So that's one. Probably the second one is be able to be even more in Zurich and less in Bern, maybe. Or at least be more flexible in that respect. And the third one is probably the hardest one, is the market access. It's really God for a day, huh? Or is it just Switzerland?
It's your wishes.
My wishes.
Your
yeah.
wishes.
So the third one is probably impossible for anybody in Switzerland to fulfill, but it's really that we go back to a meaningful internationalization of the financial sector and reverse this current trend, which really is one of withdrawing into national borders very opportunistically, actually.
Okay. Well, thank you very much. I think we'll break up for coffee, so this way. So we'll just break up for coffee, and please be back at 10:20. We'll dig into taxation, so a very important topic. Thank you.